All right, good evening, everybody. This is Jeff Scott, and happy Father's Day to all the fathers out there. Let me go hit off the air conditioner, which is right by the phone, because I'm sure it's not going to be good for the sound. All right, so that'll turn off momentarily, and then I'll sweat, but I won't have to fight the fan. I thought tonight I would do something a little different than what I normally do on my YouTube sessions. Hopefully, I promised my wife it won't take more than an hour. She knows that that's probably a little white lie, but I'm going to do my best. And what I thought I'd do is go beyond just what I normally do with my top-down investing and put together a list of stocks that I might have interest in looking at tomorrow, but actually talk to you about how I look at what I do with that list and what signals I look at, how I integrate HGSI into that, and then share with you some of the scripts that I use that you can use within Thinkorswim. So I always like, or at least over the last couple months, I've been putting titles on my program. And as you can see, today's title is, Will the Fed Get It Right? I don't think the Fed got it wrong last month, but the market started discounting the piece about if the economy gets better and started assuming that the Fed's going to start reducing the easing. And I think you've seen what the impact of that was. You've seen interest rates drift up. You've seen the market get into some challenges. You've seen the VIX pop up. You've seen interest rate sensitive instruments such as utilities, master limited partnerships, and REITs all sold off. And, I still personally think that the Fed, what I heard the Fed say is, if there's strength in the economy, if it continues, then they'll start to ease off. And I'm not convinced that we're actually seeing that degree of strength that would drive that. So more about that later. The disclaimer, as always, is for educational purposes only. I'm a doctor, not a broker. And although I hope to build a big relationship with HGSI and George, I'm currently totally independent. I paid for all the tools that I use, and I'm sorry about that, including EdgeRater. And what I show you is what I do normally, again, with commercial tools. I use a lot of different programs. I don't need to. And those who've been with me before know I need a real-time trading platform. I need something for analysis of the market. And HGSI, this is where HGSI is the king. Now, someday George is going to make me really happy and make HGSI real-time with interface into 6 different trading platforms. I know George is now having a heart attack, so I don't need the other guys. But right now I still need them both. And I travel a lot. One of the great things about HGSI versus some of the online things like FinViz is not just the flexibility and the speed, but the fact that I don't have to be hooked up to the internet to actually use the program just to start it. EdgeRater is I do a lot of back testing. I know there was a question about back testing of some of the things I'm going to talk about tonight that I'll mention. I like seasonals, but I'm not going to spend much time, I think, today on seasonal analysis. And everybody knows I'm a big fan of Ian and Ron, Woodward & Brown Investing, and certainly use all their services. And again, I don't want to spend a whole lot of time here except to focus on a name that I don't usually focus. We lost, as a community of traders, a giant, I guess 18 months ago, maybe even 2 years ago, when David Elliott passed away. And David Elliott, not the David Elliott on our HGSI board, he was a great trader, and he did free webinars almost on a nightly basis, some of which are still archived at chartsandchat.com. He introduced us to a lot of things like SOAPs, maps, introduced me to squeezes and MOBO breakouts and breakdowns, failed new highs, failed new lows. And a lot of what I learned from David Elliott didn't really conflict with or compete against HGSI, but it built upon what I learned from HGSI and helped me when it came to my trading of when to make decisions. So I incorporate a lot of different people in what I do. Obviously, Ian and Ron, O'Neill, Morales, and Catcher I'll talk about tonight. Bigelow is the candlestick person that I follow. Van Tharp with position sizing, and to a lesser extent, Value and Time, Pascal William with his institutional buying, and Ron Gronke, now that I'm retiring in 14 days, I have to create income, and he's got some great stuff about cover calls and naked puts. And then I can't forget Alexander Elder. So I've put them together in a mishmash, and that's how I trade. So rather than do my typical bottoms-up or top-down approach, we're going to skip that tonight, and I'm going to show you a bottoms-up approach and how I use HGSI and some of the other tools. Specifically, I want to talk about how I use these various signals that I listed here. And for the most part, you've probably heard of all of them, maybe not MOBO, breakouts and breakdowns. We'll get into detail on those, and also a little bit about the red candle high and green candle lows and why I use them. We all know about the software, the website. I think I have a new picture because it's different now, but you know that there's a free trial if you're new to this program. See if I can bring it up real quickly just for completeness sake. So that's much cleaner look. Congratulations, George. Big improvement. For those that want to listen to more of what I've done, you can go direct to my movies there. In addition, Ron Brown puts out some great things on a regular basis. HGSI in Action by Ron Brown. He's really an expert at this stuff. I'm still learning compared to him. And a number of other neat tools and stuff you can use on the website. And if you're totally new to this and you're watching this later on YouTube or something, this isn't you have until Monday at midnight offer, but there is a 30-day free trial. So everything that I'm doing, you can be doing yourself with the software. I put this up just to remind me that a lot of what I talk about and what I do depends on what the market is doing. And you know, I keep saying we're here. We're still here. I mean, I think we're rolling over, but every time I think that's happening, it turns out there's another leg up. And we've had a series of 3%. We just got off a 5% correction, but nothing has broken a trend line that I'll show you going back to the middle of November. In a strong uptrend, green candle lows work great because it's a pullback reversal. In a downtrend, red candle highs work well. That doesn't mean they don't work at other times, but if I'm a pullback investor, I want to buy pullbacks in an uptrend, okay? And I use those green candle lows to find this point, whoops, here and here and here, pullbacks in an uptrend. I look at red candle highs to help me find the retracements in time to short again in a downtrend. And I look for the highs and the lows within a Darvis box, knowing that I want to short against the top and buy at the bottom unless there's a breakout or breakdown. I mentioned seasonality because we're in the summer. I started seasonality with Best Choice. Then I went on to seasonality with TradeMiner from Gecko Software. Most recently, I use a lot of Magenta Trader. But it's funny how other programs, and this is OmniTrader, actually incorporate seasonality as well. And just a very simple tool to use in OmniTrader, and I haven't updated it in a couple of months. I just pulled the slide out. But what I can do is I can look back 20 years and get an idea of what the monthly performance is over that 20 years and the number of times it was in that direction, in this case, the direction that the movement was. So if you look at the S&P 500, June, August, September are very tough months, the same as the Dow, and a little bit less, just August, September in the NASDAQ. So the sell in May and go away phenomenon, which really didn't work in May. May was a pretty good month. Still has some good or lousy months to go through in August and September. July is a better month than June, and in fact, maybe it's because June is such a bad month. There's been some pretty good Julys, nearly 1% up, but only 50-50 directional on the S&P 500, 1.6% up on the Dow over this 20-year period of time, up 71% of the time. And then on the NASDAQ, July, a little bit more than half the time, up a little bit. So it sounds to me like July is a time to be in big stocks. But enough of that. The point here was just to remind us that the marketplace, it goes through ebbs and flows, and we're in one of those times when the flow is negative. Now, when I do my trading, I'm looking for specific patterns. And then I follow those patterns real time in the day. And as I usually say, to me, I look for stocks that I find compelling. And if the market is in the direction that I'm thinking of going, if the sector is going in the direction that I'm thinking of going on a stock, then I'm interested in buying that stock if I get a trigger. So tonight I'm going to talk about triggers and a little bit about some of the setups that I use. Much of this can be done in HGSI. Some of it probably requires some script that I can share with folks and some use of Thinkorswim. So the first one that I want to talk about, and we're going to go look at these in real time, is green candle lows and red candle highs. And I got this from George Lee, who adopted it from David Elliott. George Lee, who is lives up in British Columbia, if you ever have the opportunity to listen to him live, I highly recommend it. He's a great trader, and he's really good at the podium. And I actually learned quite a bit from him. So if you look at a green candle low, what is it really telling you? It's telling you that the low of the day is the lowest low in 4 weeks of trading, or 20 days, or perhaps 20 months, depending on what time frame you're looking at. So clearly this is a low. And then more importantly, you closed higher than the low, so you closed above the low, and the close is above the open. So not only is it the lowest low in the last 20 periods, but it's going to be a green candle because the close is greater than the open. Now, I have not back tested this as a trigger because it's not a trigger. Okay, it is a setup, and it forces me to look to see what happens next. The red candle high is similar in that the close is less than the open, so it's red, but it's only looking back over the prior 10 periods. So I use these to scan for failed new lows and failed new highs. Now, David Elliott taught us that these could be powerful reversal signs. And again, these are setups, not triggers, alerting me to a possible change in trend direction, a potential beginning of an Elliott Wave 3 move, which is the longest and most powerful move. And the script is right here. Okay, can easily be programmed into Thinkorswim, TradeStation, and your favorite real-time trading program, and it's hard-coded, as I will show you as part of HGSI. So as I look at charts, these are one of the things that I'm looking for as I look for setups. Here's another script. This is Thinkorswim script that I also received from George Lee, and it's looking for a squeeze. Now, I will challenge George to see if there's a way to come up with this in HGSI. I don't know if there is or there isn't, But basically, a squeeze represents contraction of the Bollinger Bands inside the Keltner channels. And it shows a compression of volatility, almost like a spring, from which strong moves can occur. Now, I've seen numerous definitions of squeezes. And again, this is a nice setup. It's not a trigger, because I don't know which way the stock is going to move out of the squeeze. But I know that ultimately most stocks that get into a squeeze will break forcefully above or below. So if I find stocks in a squeeze, then I might want to look at some of my triggers to tell me when to act on that stock. Another setup that I love is Ian's high jump bar, which I call our personal ATM machine, because I found this to be a great shorting tool. Now, the problem with the high jump, it's not a problem, by the way, it's reality. Extended stocks have a tendency to get even more extended. So by itself, hitting the upper part of the high jump does not mean your time is up. It means you got to be watching closely. However, if I have a red candle high at the high jump, highest high jump, then I start to get excited. And for those that don't know the high jump, you take the price and you get the distance from the closing price to the 17, the 50, and the 200-day moving average. You add the three of them together and you plot it, and you look at how you compare to the historical high. Now again, this is another thing that maybe we can work with in HGSI. I can use HGSI from a warehouse view to see the absolute value of high jump, but what I really need to do is know how that's compared to the last 50, 100, or 200 high jump values. Now it turns out you can program that, and I've got that programmed into TradeStation, so I can vary the duration of time, but it gives me a sense of how extended a stock is. And if I have 2 or 3 stocks that look equal that I want to buy, I'm probably not going to buy the most extended one. So I use this, again, as a setup, telling me that a stock is extended, and I look for triggers, and sometimes that trigger might be a red candle high. Now, those are what my overall setups that I like to use besides these is I like pullbacks. And so I use various scans to find a closing price that's within X amount of the 50-day moving average from above or the 200-day moving average to try and find stocks that have pulled back. I use the force index as I do on my top-down investing as well, and the bongos to look for things that have pulled back. For triggers, I need to do something else. For triggers, I need to see a signal, whether it's up or down, that tells me something has changed. Now, Pascal Willen would tell me a great signal to look at might be institutional volume changes, and I agree with that. One of the things that we learned from Ian and Ron are kahunas, which are movement within the Bollinger Bands. We know that 95% of the time the stock price is between the upper and lower. And what Ron and Ian taught us, that you hardly ever see a 40% move within the bands, and even a 24% move, both up or down, are something to pay attention to. And we call these kahunas. The light ones are little kahunas, the dark ones are big kahunas. So if I've been watching the stock, it's pulled back to that 50-day moving average, maybe cut it a little bit below. And yesterday it had a green candle low. And today it's had a very positive day, and I picked that up on a scan of kahunas either after or during the market. That's a trigger on a setup which was the pullback and the green candle low. So to me, a kahuna is a sign of momentum and volume coming into my instrument, and it's a trigger. Another trigger I like to use, and here are the the scripts for Thinkorswim. And by the way, if he hasn't yet, George will be sharing this PowerPoint, so you don't have to worry about rush, as you mentioned earlier, quickly writing down the scripts. And we're going to show you how I use these shortly, but these will be shared with everybody. So if you don't have these scripts already in Thinkorswim, you can do them, and you can combine a lot of these as I'll show you. So moving average, or MOBO breakouts and breakdowns are great tools that I use, because if I have a stock that's been squeezing and then it has a MOBO breakout, that's a trigger on a setup which was the squeeze that I might want to buy. So I'm scanning real time during the market, looking at MOBO breakouts and breakdowns, and I might look at them in different time frames. And again, these are David Elliott, and as taught to me by George Lee. Other triggers that I use, and I won't spend much time on the next two because they're pretty standard of what we do in HGSI land. One of them is pocket pivots. If you don't know what pocket pivots are, you need to read Gil Morales' and Chris Katcher's excellent books, starting with how they made 18,000% in the market using O'Neill methodology and some of their extra stuff. Pocket pivots, to me, often represent early buy points or follow-up add-on buy points. So I'm scanning real-time in various programs for pocket pivots, and one of the beauties of HGSI, it may be the only program today that I can plot these end of day as I start to think of what I'm going to buy tomorrow. Now, when I've listened to Chris Katcher and Gil Morales speak, I go home believing that pocket pivot today is potentially a buy signal tomorrow. And so I've historically used pocket pivots mostly as a end-of-day phenomenon. George Lee has showed me how he uses pocket pivots on very short time frame charts as triggers in a short time frame. Another Morales and Katcher teaching has been viable gap ups. And if you think about gap ups, everybody talks about fading the gap, gaps are filled, and a lot of folks are afraid to buy gap ups. Well, what Morales and Katcher have come up with is a term called a viable gap up, and they occur in fundamentally strong and leading stocks. The gap must be at least 0.75 times the 40-day ATR. The volume must be 150% of the 50-day moving average volume, occurring within an uptrend or constructive consolidation, and it should not close below the intraday low of the gap up day going forward. These have been great triggers to buy as well. Now, often when I've used the viable gap ups, frankly, they've been triggers that have occurred when I really wasn't looking for a specific setup. And there are ways in Thinkorswim and TradeStation to monitor for viable gap ups intraday. In fact, all you got to do is know how to program these programs, and you could figure out how to come up with these, because it's pretty much spelled right out for you of what goes into a viable gap up. Now, we're going to jump into the market in a second. I just checked to see the futures. Somehow the S&P futures are up 3.6. That's probably a bearish sign, because over the last week, the big up days for me have occurred when the futures have been horrible at night, and then they seem to correct, come back overnight, and open up in the morning. It's the days when I've gone to sleep at 2 in the morning thinking the futures are strong that I've gotten burnt. Here's how I look up at the S&P 500. In fact, I'm going to just skip this and go right into HGSI in a few minutes, but I'm going to point out a couple of things. We had a 8.9% correction in 43 trading days. There's 20 trading days in a month, and a little bit over 2 months that ended around November 16th. Do you notice what we have here on the end of that correction? Well, if you look up here, you can see it's a green candle low. Now, I'm the first one to admit that I've got green candle lows occurring multiple times before. But if I look at these green candle lows before, the first trigger that I see is right here, is the kahuna. So it was a green candle low, so I've had setups on each of these pullbacks for a bounce. But it was the kahuna coming in after the green candle low. It was the gap up. It was the breaking above the 200-day moving average, all of which could have been triggers to get you into the market. You notice the 5 circles here, 6 circles here. Except for this one, which didn't quite make it down to the 50, nor to the trend line that I painted here in black. We have had 1, 2, 3, 4, 5 touches to a very strong upwardly trending trend line that's driven a 20.6% gain in 148 trading days since that November 16th-ish low. That's very bullish. So until we decisively break, which means break it, and then the following day trade below the close on the day that I break it, we're still in an uptrend with a series of very modest corrections in a season where one expects market pain. So we're going to jump into the programs, be your own guru, and I think, not that I know anything, but I think what I can say made a difference for me is going to live meetings like Palos Verdes, reading the literature on the folks that I wanted to emulate and follow, reading the Market Wizard books to see how other great traders have done things, helps you to become your own guru. Don't follow gurus, become your own. The next 2 bullet points are about making the appropriate investments in software tools and education. And, you know, everybody expects the market to pull back. Had you gotten out in May, you would have missed the last run-up in the marketplace. Now, we're getting close to those May numbers, but not quite there. Let the market tell you what to do. Don't you tell the market what it's supposed to do. So, I will see, George, you're going to interrupt me when there's questions, I hope.
Absolutely.
And I'm going to continue on and start looking at the program and some real-life use of what I do with these. Couple of things. Folks know that I like to use certain tools to give me an idea of how the market is going. So let me look at, this is a group performance analysis, which is GPA, which is an HGSI, that I run a lot of my different searches against, where I build a list, a watch list, and then I see how that watch list compared to the market. I see a lot of red and not a lot of black. So I know that that was a tough week in the market. I go down here and I look in yellow to find the S&P 500, which was down 1% for the week. Now, what do we know about high growth stocks? If the market's down 1%, high growth stocks are probably down 1.5%. So the IBD 50 was down 1.37%. HGS 100 was down actually a little less than the market at 0.95%. Some of the other things that I look at, the stocks that were in my portfolio on Friday, not to say they're still there this Friday, were down less than the market. It's a little bit more balanced with some shorts, which is why it's less down than the market itself. The stocks that I picked as buy watches last week did better than the market, but still down pretty rough. Where was their strength? 3 different Bible gap-up scans were positive, 0.3, 0.47, and 0.52%. So maybe Bible gap-ups work even in a tough market. Hint, yes, they do. What else was up? I call my pentaplays. They were up 1%, and my pentaplays were at kahuna force positive, which means they had a kahuna and their force was in the same direction. Pocket pivots, a Bible gap up, a squeeze, and a mobile breakout. And I scan for those every day, and had I bought the ones that showed up over the weekend, so on close of the day last Friday, they were up over 1% when the market was down 1%. So that gives me a sense of what the market is doing. I like to look at Edge Rater, and in the essence of time, I'll look at my Edge Rater pictures. I'm going to shut down Edge Rater to save on bandwidth. And in Edge Rater, I take the picture every day and I store them. I can see that if 50-50 is the line in the sand between the bears and the bulls, I could see that 2/3 of the stocks are trading below the midline of the Bollinger Bands, which is bearish, but 66% is far from being horrible. More important, there's only a smattering of stocks that are below the lower band. So this is more of a middle-of-the-road picture to me, certainly facing negative, but it's not so negative that I would expect a bounce just because of oversold. Now, it's in an area where I would expect it to potentially bounce anyways within a narrow band through the reporting of the Fed minutes or the Fed discussion after their meeting. All they got to say is you overreached, we're not jumping to tighten, and the markets will trade up. But if the market is that loud, the markets will likely continue to trade down. All right, so let's jump into HGSI, and let me show you some of the things that I might do with HGSI, Thinkorswim, and/or TradeStation to take advantage of the things that I just looked at. So I did want to go look at the S&P 500. So let's just open this up. And no matter what my goal is here or my intent, I can't ignore what the market is doing, and therefore I still have to look at the market whether I'm bottom up or top down. So 8.9 correction from early September to the middle of November, ending with a green candle low right here. As I said, you had green candle lows, 3 of them here, but if you look at these green candle lows, there's no trigger. So I would have gone in each of these nights, say, oh, I have a hammer on the 50-day moving average. That looks promising. If the market opens up, I might want to be a buyer. It opened up hard down. I had a green candle low here. Kind of a narrow range bar inside day, and the market just went on to have a series of dojis here. Certainly not a clear-cut change, and it's below the 50. I had a green candle low here. And right at the 200-day moving average, if it opened up substantially above that, it might have been interesting. It opened up and stayed predominantly below most of the day. And then lastly, I had a green candle low here. So here's my setup. And my trigger was the next day with a big gap up. I have a Eureka on the NYSE telling me strength came into the market. And I had a kahuna on the S&P 500. So I need to see the combination of a trigger and a setup. We've had a 3.4% correction, a 3% correction, a 3.8% correction, and most recently a 5.3% correction. This trend line has had, as we said, 1, 2, 3, 4, 5 touches. The more touches, the stronger they are. And we had a kahuna on Thursday with a big up day here. Following, of course, we had a green candle low here. and we had a kahuna on the same day, so I had a trigger occurring on the same day as the setup. But this one failed. It failed at the 17-day and came right back down. So we'll see if it fails here or doesn't fail. That's not a market that should be making you feel a lot of pain. I mean, you probably had some pain this week, but my God, we've had a 20.6% gain in 148 trading days. That's for the bottom of March 2009, when we were oversold from hell. That may be the biggest gain that I've experienced in a 6-month period of a market in quite some time. So I'm still pretty excited about the market. Now, just out of curiosity to look at, so if I look at it right now, we're bouncing on this trend line, going sideways. What do I see happening here? I see a squeeze forming. I see my 200, my 8-day, and my 17-day starting to come together. And I wonder if we don't go sideways and then bounce off this trend line or break through it. And it'd be interesting to see if, you could probably draw a trend line here too. And I'm not the greatest at drawing things live, so I warn you, my charts will not be pretty. But are we in a triangle formation, and which way is going to hold remains to be seen. So I think there's going to be something happening here soon, but I'm not convinced it has to be going down. The Dow, a very similar pattern. A couple of touches on the opens here. On the 50-day moving average, it does undercut it several times. And the same thing, sort of starting to see a squeeze between the 17 and the 50. The green candle lows are just one of many things. And you could see you had a kahuna the following day, but you couldn't get above the 17-day. I'm just looking back to see if there's anything else I want to point out. And then, just for sake of completeness, we'll take a look at the NASDAQ. And the NASDAQ, they're all rolled over some. If you just looked at these last 10 days, they're going sideways. Clearly, there's a change from where it's been. You've got support of this 50. So I guess my parting message here is that I'll probably pay most attention to the S&P 500, but I'm going to pay attention to the 50 across all these things. But if I lose support here, I'm probably going to get out of the market or go much more short than I am. Before I move on and start looking at other things, I just want to review what's sitting here, especially for folks that may not have been on this before. So when I look at stocks, I'm going to have fundamental data here, but I don't really need the fundamental data right now. In fact, let me open up a stock. Open up one of my old favorites, Celgene. I'm just going to use this not to say whether it's a buy or not a buy, but rather to talk about what I have on my charts. And you're going to see how many of those things I mentioned do I have. I have fundamentals. I'm an earnings machine. I like earnings. So I typically don't just have that open. I typically will also open up MarketSmith because, George, you're not going to let me do these anymore because I'm using these meetings sometimes to point out my wish list. So what MarketSmith has over HGSI, by the way, I pay for both, so it's not as if I like one and I don't like the other. Is what I like a lot on MarketSmith is it gives me more time going back and forward in earnings. Now, I believe that there's a similar data source for both programs. Oh, come on, I'm holding down the control key. Hold on one sec. I apologize for this. I got a new toy here today, so it's trusted site, add, all right. If I can't, all right, allow once. All right, so when I look at MarketSmith, and George, get your pencil ready. For people who don't know George Roberts, he's the proprietor of HGSI. It's a relatively modest-sized shop, extremely responsive to the user base. Much of what you see in the program of HGSI today are things that have been put in over the years by suggestions to George and Matt, the lead programmer. I like this box here. I like the fact that I can see earnings for 2013 and 2014. Now, I know that these things get less accurate the further out they go. The other thing that I really want, so what I'd really like to see in HGSI is I'd like to see perhaps could we add projected 13, 1 year out, 2 year outs, and what the earnings rates are, or earnings projections and growth rate. And the other piece, which is in the program, that I'd like to see on this screen, George, you're going to really not like me doing these programs, is I know that earnings are due on July 25th, 2013. I want that on here as well, because I think if that was there, and maybe it's in other parts if I scroll down, and I'll have mud on my face that he's changed that. There it is. I want this on the main screen because to me that's such an important thing that as I'm looking at charts. So I'd like to see more earnings and move that earnings date to this screen. That earnings date is a great thing. Other momentum indicators that I use looking for triggers. I look at the bongos. To me, it's more of a confirmation. I want to buy uptrends. So when the weekly bongo is green, I'm in an uptrend. I like pullbacks, as I already mentioned. So weekly green, I see red in the daily. Those are periods of pullback, telling me to start looking for things like green candle lows and triggers coming in that I might want to get into that equity. I use the force the same way. Long one green is in an uptrend, red is in a downtrend, and the opposite direction on the short-term one are pullbacks or retracements. Here is the high jump bar, and I've overlaid on the high jump bar red candle lows and green candle highs. And if you downloaded the program and updated it, you should have these charts. Now, I use them again. They're setups. They're helping me guide me what I'm going to do, and I can also scan for them. Now, when I see a day like this, I see a high jump near the top, and I see a red candle high. What am I thinking? I'm thinking that my trigger, I've got two setups here, and I'm looking for something to trigger me to short this stock. Now that trigger could have been a DI crossover, which is what I have here. It could have been a kahuna down. It could have been a MOBO breakdown, which there was on this day. It could have just been an open below the prior close. So when I see high jump bar near the top, overlaid with a red candle high, I know that this is either going to go sideways for a prolonged period of time, or it's going to turn around and correct. Now again, by itself, I'm probably not selling it. But a gap down the next day, a kahuna down, a MOBO breakdown might be enough. I mentioned Bible gap ups. I don't know any program, and I own them all, that allows me to map out green candle lows, red candle highs, Bible gap ups, DI crossovers. You can do in many different programs. In light blue, pocket pivots up. In pink, pocket pivots down. And then on the bottom, I talked about the kahunas, and I didn't spend any time today. These are Eurekas, which are sort of the follow-through days of HTSI, but it's only being done on the NYSE. So I can look at any stock and make decisions based upon the picture I see here. Now, some of the things that I played with are the warehouse view. And some of these, by the way, are works in progress. So I'm in all securities, and I'll do a view of, please tell me they didn't come over. All right, let me go into the filter. So here's I'm looking for green candle lows. So scorecard is just my combo rank, which is sort of a mixed fundamental and technical. No index is a filter that I put on which says $5, $750, 150,000, and no indexes. And then also want a green candle low. So you can see on my filter, actually it's 150,000, not a group index, and green candle low equals yes. Now, I haven't played enough with George, but I believe we can also set days since green candle low as well. I hit OK, and there are 18 stocks that had a green candle low. Now, every one of these stocks has to have been in a downtrend, or is probably in a downtrend, that today was the lowest day of that last 20 days, and it closed above where it opened. Again, you don't buy because there's a green candle low. Oops, sorry about that. Fat finger syndrome. So here is, just take a look at what came up. EBIX. I think they're in the oil, application software, insurance industry. Earnings per share growth, I'd use the word tepid at best. A lot of green in my momentum indicators. The Dongo Daily is red, showing that it must have been in a pullback, and it's sort of been in a gradual pullback. A lot of doji flat days there. Forces turn positive. I've got a green candle low came in on Friday, and I don't necessarily buy this right now, but I also saw a kahuna here, so my hair is standing up on the back of my neck, and I might want to see what does this stock do tomorrow. If the market is strong and the stock trades above its close at the open, I might be interested in this stock. Why? Because I've got multiple different triggers here. I've got the Bongo Daily red, weekly green, so I've got a pullback and an uptrend. I guess here's your uptrend and then the pullback. The forces have turned green, accumulation is green, and I had a kahuna. So I would probably want to watch this tomorrow. Again, if it opened up, I might be interested in. I bet I can find better looking stocks. I don't know RJ Lodging Trust, and this is one where you're already scratching your head and trying to figure out what the heck happened here. So you've got a belt hold day where you had your high similar to what it was on Thursday, but you look at all this mess, 1, 2, 3, 4, about 8 days of mess that you took out the high and the low. So this stock must have had news come out, which means I have to figure out what it is. It's probably a REIT, which I don't do a whole lot of. And it opened up on the 200-day and closed sort of flat day over day, no change. I would skip this one and try to wonder what the news was. Some days these work, some days these don't work. So what I have here is a stock that's clearly in a downtrend. It makes money, but its earnings per share up and down. 2 green candle lows in a row no trigger. I might have this on a watch list and not do anything with it. So I will look at these on a daily basis, but what I'd rather do is look at good stocks and see if I can't find some of these that might drive me to be more interested. So one of the things that I do to find good stocks is I use a group inclusion filter. And I already did that this afternoon. And these were the 30 stocks that I found that were interesting. Now, we're going to look at these and see if we can't find anything about triggers and setups, etc. And I put those into HGSI, and I call my GIF All-Stars. I also looked at about 400 other charts, and we may want to look at some of those as well. So here, these were some examples I might go back to of where it worked really well. So here's my GIF All-Stars. And let's just go through some of these and see if we see anything of recent era where those green candle lows, Bible gap ups, kahunas may affect my decision making tomorrow. So I see that the last green candle low was a false signal here. Again, I don't see any kahunas. I don't see any pocket pivots up. I don't see a DI crossover. I don't see a Bible gap up. I don't see a positive force. So there was no confirmation of that green candle low. I have a Bible gap up on Friday. Now, according to my interpretation of Morales and Catcher, if this stock opens up tomorrow, if it trades down but doesn't violate the low of the gap up day and then starts to bounce, I might want to be in this stock. I could tell you that this was a highly rated stock this week. It was in multiple smart groups, which is why it's in this list. In fact, go back there. It was in all these Bible gap ups, Best of Woodward and Brown, breakouts, fastest growing, HGS 100, bullish patterns, high top 150 EPS, sprinters. So a lot of my favorite searches, 15 of the times INBN made the search. It was the third highest on my group inclusion filter. So we've got a Bible gap up. So the stock, I guess, technically is in an uptrend now. It's a stock that's been really beaten down. You know, I'd be nervous that it's going to get into some kind of resistance here. On the other hand, it's had several weeks in a row of pocket pivots. Everything is green. This stock may be ready to take off. And funny thing is, Gil Morales mentioned this stock at one of the meetings I think it must have been online, listening to him in the last 3 to 4 weeks on his weekly webinars. So here's a Bible gap up with a kahuna, huge volume, everything is green. This is one stock to perhaps consider, but it's not a low-risk stock. And all I've done to find these has been the group inclusion filter. So what did people know before earnings came out? So I'm not in this stock. I've been in it in the past. My wife and I have some internal challenges because of the bullets and the guns. I would not have been in it because it was below the 200-day moving average anyways. It had a Bible gap up sort of into a doji. If it trades up on Monday, it might be interesting. Huge volume on Friday. This was earnings driven. Interesting thing is it had a kahuna the day before. So this might be a stock to look at. So my setup and trick, you know, as I said, sometimes the Bible gap ups, I don't see the setup. I catch them because of the trigger. But you had a kahuna the day before. I still wouldn't have done anything. Sort of squeezing here with the 200, the 17, the 8-day exponential, and the 50, all within 40 cents of each other. So I suspect if I go into Thinkorswim, we had a MOBO breakout day as well on Friday for Smith & Wesson. Chewy's Holdings. So here is, all right, we had a red candle high here, but where is my confirmation? There's no confirmation. So I'm going to get excited on a red candle high, and again, that the high jump is near the top, but it's not at the top. I don't see the next day a big down day. I don't see a gap down. I don't see a kahuna down. Everything is still green. So this is not an actionable, in my mind, red candle high. Now, if I look at this one here, it wasn't a great trade. So the stock's really just going sideways. But you had a red candle high. You had a DI crossover, a pocket pivot down, and several days of negative kahunas. I mean, so you had plenty of triggers the next day, whether it's, you want to call it the pocket pivot, the DI crossover, and lots of confirmation. It's just the stock's going sideways, and there really wasn't a big move one way or the other. Nation Star. So as I did my top-down review this week, I really want to be playing OCN, NSM, and WAC. These are all three companies that are similar. They've been buying subprime mortgages from the banks. They manage them. My guess from looking at their business models, they don't have a lot of risk, and they have a lot of upside. And these have been very volatile, as you can see. All three of them have similar volatility. If you look at a weekly chart, pretty clear they've been in an uptrend. You know, it's been kind of an ugly uptrend for the last 18 months, but they're in an uptrend. OCN had great earnings come out. WAC, the CEO was at a meeting last week complaining about how they get no respect in stock price. NSM is the other. You can see in a land of not much earnings out there, great earnings per share growth. So here's a sort of a setup for me where I pull back, sort of a saucer bottom. I'm looking for some type of a trigger. So if I saw tomorrow a Bible gap up, a pocket pivot, a kahuna, and the way that I trade, I'd be sharpening my pencil in wanting to get in this. If you look at the other two, you'll see similar patterns. OCN's already broken out. Now, it had a couple of Bible gap ups up here, and you could have had an opportunity to have gotten in earlier. The red candle high here obviously was early. There was no confirmation. The stock sold off, but I'm not going to tie it to that red candle high. Lumber liquidators. You had a green candle low. So here was an interesting, here was a potential buy signal. You had a stock pull back to the 50, and then you had a green candle low day, which I pick up intraday, and a kahuna off of the 50-day moving average. To me, that was a buy signal, and had I been in the market during the day, that would have been a compelling story. Copa Holdings, this is a airline stock. So I've got that little saucer with a dimple in it here. So that to me is a setup. And what do I have? I have a pocket pivot coming in on Friday. Everything green above. That's an interesting. So what I'm just trying to show you is not that I know anything, but this is how I try and incorporate setups, whether they're candlestick patterns, price volume action, green candle lows, red candle highs into how I trade. Now, during the day, I'm having some fun. If I'm playing with TradeStation during the day, let's just take a look at those futures real quick. So futures have moved up since the market opened a little bit off the highs. During the day, I put about 1,000 stocks on a watch list. And during the day, I've got my indexes, my futures, my Direxion bulls and bears, and then I've got a large list of potential targets. And I'm looking for patterns. So these are Bible gap ups. So as soon as I get the volume signature, and so here's the volume percent, I've got to be 150%. My gap has to be at least 75% of that ATR. Here's how big my gap is. Once I get those in the setting of being above the 50-day moving average, I get a green light here for Bible gap ups. So I picked up early in the day Smith & Wesson, Nutrisystems. Elan is sort of a crazy thing right now. It's in play. They're selling itself in an auction, I guess. In Invensys, which we already looked at, ACAD and Ryair Holdings did not make the volume, so they didn't have a true pocket pivot. And then one of the other stocks that was highly rated over the weekend was RH, which is Restoration Hardware. I look for green candle lows. I don't need to have end of day to see green candle lows. Why? Because once I take out the low of the prior 20 days and then I turn positive on the day, and I get above the low of the prior day, I'm going to turn green here, which means sometimes I turn off. I pick up red candle highs during the day, so I can scan these. Obviously, there are a lot of red candle highs yet on Friday, so a lot of false breakouts to the top. I can scan for MOBO breakdowns during the day, MOBO breakouts during the day. I can see which ones of these have occurred with the squeeze. So if you're visual, and I'm very visual, much of what I've gone over tonight you can do real time in TradeStation. If you're not visual and you'd rather look at lists, Thinkorswim, as far as I know, is free, and you can build scans in Thinkorswim. So how about, I'd like to know MOBO breakouts from a squeeze. So I want to know stocks that have been in a squeeze that have a David Elliott defined MOBO breakout. So let's scan for it. So when I do this, and I've got my parameters, there's my little mouse, and I hit scan, I get a list of MOBO breakouts with the squeeze. So I might be wanting to look at some of these stocks. Now I have a proprietary indicator here, which if it's a green, if it's a positive one, it shows institutional volume flowing in. So let's look at some of these. Smith & Wesson, we already looked at, was one of those stocks with institutional volume, as well as this was that Bible gap up and MOBO breakout from a squeeze. So forget the institutional volume piece, but with the scans I gave you, you should be able to program that. In fact, if I was to look at this query, last price over $5, volume over 150, and then all you got to do is cut and paste. Here's for the squeeze, here's for the MOBO breakout, and save it, and now you have your own MOBO breakout from the squeeze. And I know folks like George Lee, who does this for a living, will scan intraday, 1 hour, 4 hour, as well as end of day. How about breakdowns from a squeeze? So I can look at not just what's got mobile breakdowns, but which is the trigger, but who had the setup. And there are 130 of them. And of course, if I have the positive volume, I also have minus volume. So the top 7 or 8 are stocks that not only did they have a mobile breakdown from a squeeze, so the squeeze was the setup, the mobile breakdown was the trigger, but they also had institutional volume coming out of the stock. So I look at those. I also scan for intraday other things. I could look for pocket pivots. And I've got a number of different pocket pivot scans. Now, in HGSI, we print pocket pivots up and pocket pivots down. I haven't heard Morales and Katcher tell me that pocket pivots down are validated. George Lee looks at intraday pocket pivots. Again, I've not heard Gil or Chris validate them, but George Lee makes a lot of money using them. And you could see that NSM, that mortgage company, I just saw that was here, had a pocket pivot up. Did WAC have one too? Let's do it by alphabetical order. WAC didn't. How about OCN? So just NSM did. So these are ways intraday to study what the market is doing. Now, TradeStation, I've got a bunch of proprietary indicators, so I've had to buy them. Thinkorswim, everything I showed you are in the PowerPoint. You're just going to have to build out your own scans, and if people have problems with that, I can direct them to where they can learn how to do that. What else do I want to do? We'll go back into the warehouse and look at some of the stocks that I liked that I found on my review this weekend and see if we can't use some of those triggers and setups. Normally I find about 50 stocks that really get me excited. I found 26 this week. That's not a big number. If I look at where they came from, I don't want to give up on home builders, they're getting long in the tooth, to be honest, but I had several of them look interesting. A couple of biotechs look interesting. Oil, gas exploration looked interesting as well. Let's just go through these, and it's already 9:09, and then I'll take any questions and then say goodnight. So I'm going to go through these rapid, telling you what I see and what my thoughts are on these companies. Restoration Hardware, Bible gap up on Friday. Certainly the stock is getting long in the tooth. I don't see a high jump bar because it's not old enough. It must have been a new public offering back here. So you don't have a high jump bar yet. 46, so it's 22. It's about 50% above the 50-day moving average. It had a huge volume, a kahuna, and a Bible gap up on Friday after 2 subtle pocket pivots and a strong group. If you like chasing Bible gap ups and strong stocks, and I do, this looks very strong, but not without risk if the market turns over. This is a preclinical biotech that I own. It's called Mankind. Why do I own this stock, and what got me into the stock? Well, most recently, you could have got into the stock on a series of Bible gap ups. I got into the stock because it started triggering some volume filters for me back here. And it also showed up on Harry Boxer's one of his webinars. And I like the stair step up that it's been making. They've got an inhalation diabetes drug. It got turned down once by the FDA. And it was turned down because of questions about the vehicle, meaning how it's given, not the drug. And they're going to go back to the FDA. Their studies are completed. It'll be interesting to see. It's certainly long in the tooth. It's gone from less than $2 to 7.5. But you had a nice little pullback here. Bunch of Bible gap ups, probably worth watching, maybe too extended. Here's NSM, clearly one of my favorites. I like this saucer setup here. I like the DI crossover. I'd like to see a pocket pivot that we call an HGSI, a Bible gap up, a kahuna, something to drive my interest this week. Next, our broadcasting, the entire broadcasting chain, Time Warner, Lionsgate, and others have done very well. So here's one. We're at a Bible gap up here, but it sold off below the open, so it was negated. Couple of pocket pivots. It's had a nice run. On Friday, it looks like it had a, or Thursday, it had a DI crossover, a kahuna. Up day on Friday and a bad day. This is one that I suspect is probably getting ready to run, breaking out to all-time highs. Might be interesting to watch if this market doesn't roll over. Time Warner, and as I said, a lot of the media stocks. Something happened on news here. So you had a green candle low come in here. Probably wouldn't have done anything with it because you didn't get confirmation. You had a kahuna here. Probably would have gotten interesting over here with the kahuna breaking through the 50. You don't think there's a squeeze there? Well, certain that if, let's see, this is TWC. I've been having some internet problems. I hope you guys aren't seeing them on your end. So you can you can download a lot of free indicators on the web for TradeStation, and I'm still having some speed problems, so let me see what I can turn off. Let me turn off Thinkorswim. All right, I'll come back to it. But I was going to say you can download some nice free squeeze indicators from on the web. But Time Warner, clearly squeezing here, all four moving averages within $1 or so. A pocket pivot came in on Friday. Thursday, not a pocket pivot, rather a kahuna. Big volume day, DI crossover, everything turning green on Friday. This is one that you might have wanted to be in, obviously, intraday or when it opened up on Friday. News must have occurred. It's probably worth looking at. This group has been strong. Home builders, you know, here's a cheap home builder that's gone sideways that came out last week and actually reaffirmed their earnings. You know, going sideways for quite some time. That 200-day moving average is moving up. You had a Bible gap up here, which is hard to even see. I guess from here and up there, nothing. Nothing really exciting here except it's got great earnings per share growth and trades at a multiple much smaller than its earnings growth, which is why I was interested. Not very exciting looking. Here's Capstone Paper. These guys are on fire. A lot of the paper companies, TIS, ROC 10, and I always thought that those were economically sensitive, and they're moving in a time of a bad economics. So here was a green candle low. Now here's one that probably would have mattered. You crossed the next day, you crossed above the 50, which could have been a place to get into this, but more importantly, you've had in about 15 trading days a 10-point move on what was a $28 stock, a couple of kahunas in a row, and something's going on here, a lot of volume coming in. You wonder if you're not going to get a flag here and then run again. Home Depot pulling back. Now I'd like to see something to tell me to buy, but you're setting up for a squeeze here as well as the moving averages are coming together. You had a pocket pivot Thursday, didn't do much on Friday. I'm looking here. I want a kahuna, a Bible gap up, something that says I want to get into this. Pulling back, I'd probably call that a pullback, waiting for a signal. LinkedIn, you know, funny things happening to LinkedIn, and I've never been a LinkedIn fan, and I've missed a lot of money. And the reason why I wasn't a fan was it never made any money. Look where the earnings are going. 2014, $2.10, growing 44 times. It's still expensive, but it's starting to make money, which may see the stock have another leg up. It's been weak and sold off. But what do we have here? We have a DI crossover. We had a pocket pivot taken off the 50-day moving average, volume over the 50-day moving average, and a kahuna. So a lot of things lining up here where I might want to be watching LinkedIn this week if the market is strong. Talking about pullbacks, I want to see this happen again. It runs up. This is Regeneron. Pulls back hard to the 50, big run up, and then it pulls back with the market here. You don't buy this tomorrow, but you're looking. Are you going to get a pocket pivot? Are you going to get a kahuna? Will you get a DI crossover to the north? Or is it just going to break down and become a short? Regeneron's been a big cha-cha-cha, and it's giving you another buy point at the 50, but let it move up before you buy it. Rock 10, remember I talked about the paper goods and the cardboard manufacturers, sort of a shallow cup, taken off. Had a kahuna, had a pocket pivot down on Wednesday, which was a bad day in the market, great day on Thursday. A very strong stock. Now, it's expensive, but not really. Well, it's expensive. How can I say not really? When I look at it here, when I look at Rock 10, I see $9 earnings next year, 42% growth rate. Even if it keeps the 22% PE, which is half the growth rate, that's a $190 stock. It's a $100 stock. It's a cheap stock. It had a kahuna, sort of a nice saucer pattern. Everything here is green. Probably one to watch if the market firms up. Fortune Brands, here's another one. So I've got my green candle low popping in here with no confirmation, but I've got a pullback of a strong stock that makes money down to that 50, and I'm looking for a reason to get in. And I'm looking for that mobile breakout because it looks like it's going to start to squeeze here, or my kahuna or my pocket pivot or my Bible gap up to tell me that it's still going up. Here's one I'm just hoping for. D.H. Horton has been an earnings star, and I guess now that I know it's been added here, earnings are July 26th, so they're still a month away. It's beat earnings the last 2 times. That's the only reason why I put it here, was to remind me to pay attention to it. It doesn't look that exciting right here. Everything is red on top. Here's that Owen Financial. It had a little shallow pullback, and it's running again. Now it's got a red candle high, but I've got to see confirmation. I need to see, it's not at the top of its high jump. I need to see a pocket pivot down or a red kahuna. If it opens and trades above the high of the day, I'd probably be back in this stock. I've owned this in the past. Look at its earnings per share growth. Look at its price to earnings multiple. I mean, if it's got a multiple of 23 and it's growing at 200 times, something's got to give. Even if you keep that multiple, the stock doubles and more because of the extra earnings power coming into the stock. Cray, another pullback. So here's a stock. Here's your DI crossover positive. Here was your green candle low, which would have been a good time to buy, but there's no confirmation of the signal. It's breaking up above the 50, so it made it into my watch list. So here's sort of my little setup here. It's broken above the 50. If it holds, and especially if I see a kahuna volume or pocket pivot, I might be interested in a run back up to 24. Atlas Pipeline Partners. This came on for a couple of different reasons. Here was a nice green candle low off of the 50-day moving average. The next day it gapped up with a kahuna. So this was a Bible setup and a trigger, and it failed at the 17 like so many other things that I showed you, and it's had a pocket pivot Friday that got above it, And if you're retired, how would you like to have a good-looking chart pattern that has a 6.1% dividend yield? Atlas Pipeline Partners, ATLS, is another choice, trades at half the dividend, and it just owns a 9.1% stake in this guy. Whirlpool, what a boring name, what a pretty chart. Lower left, kind of slowing down, upper right. Everything is green. Again, here's a green candle low on the 50 with a kahuna, which would have been a decent time if you opened up above that the next day to have gotten in, and you'd be up now 6 points. So a positive outcome there. Groupon, I don't know what to do with Groupon. It's certainly in an uptrend, and if I make it so the chart starts there, it looks like a nice uptrend. The moving averages are lined up correctly now. Had a big kahuna, tons of volume, a Bible gap up on Friday, and made my watch list because something's going on here, and I like what's going on. So I don't know if I want to buy Groupon, if I trust Groupon. Bible gap up, it's in an uptrend, kahuna, lots of volume. What have I got to lose? I buy it, I set my stop at the low of the gap where it opened, and if I can get in, if it trades above where it closed, I don't have a big risk. It might be worth taking a flyer on Groupon. Rockwood Holdings are a number of specialty chemical stocks that made my list. And why did I like this one? I like sort of basing sideways, a squeeze, a pocket pivot. It had a mobile breakout on Friday, 2 kahunas in a row, volume coming in, earnings actually expanding going forward. I thought this looked interesting. Oasis Petroleum, there were a number of energy stocks. Some of these, like Oasis, have some great earnings coming into the stock. They trade at multiples much smaller than their earnings, 22. Not a big company, total market cap $3.8 billion, a bunch of pocket pivots. Is it getting extended? It's getting close. Maybe one looks better. Hertz Global, not one you want to buy at the open unless you got a strong day. This has been in a great move. I could have put Avis Thrifty here as well. And this is the kind of one that, gee, wouldn't you have liked to have found that green candle low, a doji, opened up the next day with a kahuna, got above the 200, and there it would have been your signal to get in. And with any bit of a trailing stop, you would not have been stopped out here, and you'd have had a nice run up. It's pulled back to the 50, which is either going to be a great buying point or the party's over on Hertz. It's got good earnings per share growth, trades at a multiple of 16. One to keep an eye on, but you want to see evidence. You want to see a kahuna. You want to see a pocket pivot. You want to see volume for you to get into that, a Bible gap up. Stone Ridge, an auto parts. Last week I talked about American Axle. Some of these auto parts manufacturers are in major turnaround mode, and when you have turnarounds, you have big earnings coming in. I kind of liked this when it went sideways for about 10 days, 15 days. Had a kahuna on Friday. Everything is turning green. Do your own research. I don't know anything else about it. Perion is a nice pullback story. Now, it's only nice if it goes up. If you're long the stock and it falls to the 200-day moving average, it's not so nice. One to watch. Again, I'm looking for a signal. My setup is it's pulled back to the 50. My trigger is going to be a pocket pivot, a Bible gap up, a kahuna, or something else telling me that interest is coming into that stock. Sanchez Energy is another high. I'm going to go quickly here. Earnings per share growth story. Had a pocket pivot on Thursday. Everything is green. Kahuna on Thursday as well. Continental Resources is an old guy that's just trading at a big discount to its prior, to its growth rate. PE of 23, doesn't pay a dividend. Not a pretty chart. I think I put this one here because I've made money on it in the past. 3 kahunas in 6 days is something that I pay attention to, a pocket pivot. Certainly got room to grow with earnings per share much higher than its growth rate. New Star Energy is here's a big, again, this goes to those of you that are retired, that are looking for dividend plays. Huge hammer on Thursday. On Friday, we had an up day. Still an ugly chart. It's not a high growth stock chart. But if you believe you've put in some kind of a low here, and I guess would it be that impossible for me to start to buy, some kind of a trend line support you got back above. Why am I even talking about this trash? 9.7% dividend. You can't make that in the bank today. You need to find out, make sure this isn't like NTI, that the company goes away in 2 years. I thought that was interesting. All right, I'm getting tired, George. I tried to show how I use my setups and my triggers, how I use them in other programs. Okay, so let's see what I got here.
You got about 4 or 5 there, Jeff.
Novo, I thought it was a moving average breakout. Pat, I believe that's what it stands for. That's what it looks like in the script. So it's looking for stocks that are breaking above their moving averages. The look-back period, David, on the green candle low, it's looking back 20 candles. On the red candle high, it's looking back 10. I will give George a separate document that will have all the scans in there that he can post, including the pocket pivots and Bible gap ups for TOS. Any method to find buy call options during the day with TOS? Probably the wrong person to ask. I buy a lot of calls instead of stock, but I'm buying them based upon the stock, and then depending on what delta model I'm looking at, that's how I price them, and I look at them over time. I actually use a different program, big surprise to people who know me, called Option View, which helps me scan for calls that are mispriced and looking for overvalued and undervalued options if I'm looking at buying and selling options. So I don't have that for TOS, I'm sorry. It's different day to day. I tried to do something different than I normally do. Hope you got something out of it. But obviously we've got to move beyond our end of day analysis and move into how do you actually pull triggers. For the person that wants to know about TradeStation programming, email me, and I can give you a couple of different people that I've used, and they pretty much charge by the hour. Everything that I showed you, everything that I use is rather simple to do. I wanted to look at Time Warner earlier, and I just remembered, and let's see, it was squeezing here. So this red light, you had a squeeze, and you broke out from a squeeze. So not a big surprise. That squeezing, it's like a spring. And you can see how this broke out above its moving averages. I don't have mobile breakouts programmed in TradeStation that I'm aware of. I might have, I just have to go find them. I use it mostly in TOS, and I've talked to George about how we can build them into HGSI. Well, I guess on that note, I owe George a scripts. I did give him a PowerPoint, which he'll share with everybody. And you all have a great night, and we'll look forward to doing this live again in the next month or so. Good night, everybody. Thanks, George.
Night.